Do subscribe House of Commerce for more lectures. In previous lecture we discussed about assets, and in this video we'll discuss about the rest of the elements. Now moving forward to the next one. On number 2, expenses. Expense is the expired cost of asset. Means if any payment is made against the purchase of any asset or any of the services, it shall not be deemed as an expense until the asset is consumed or the services for which it is paid have been availed. So here we come to know that unlike in the general sense where we consider the payment of the cash as an expense, but in accounting we do not count it as an expense. Means if someone pays to purchase a furniture, that is not an expense in the view of accounting. It is just that the assets has changed its shape from cash to furniture. And in the same way, if you have paid for the services, like we discussed in the last lecture, prepaid expenses, if you have paid for any services and you haven't availed that services yet, the payment is not supposed to be expense. Examples of the expenses are purchases. Keep in view that this title is only used when the merchandise are purchased only. Other assets shall be recorded by their name. Means if I purchase a land, building, furniture, machinery or equipment, that will be recorded by their name unless that any one of them is not the main business of the company. Then salaries expense, rent expense, utility expense and wages expense. All these are types of expenses as well. Hope you have got clear idea about what are expenses. Now let's move to the third element, liabilities. Liabilities means any present obligation arising due to any past event which causes the outflow of economic benefits in the future. Now when I talk about the economic benefits, it does not mean the cash. And when I talk about the obligation, it does not mean that you have the obligation to pay. It can be the provision of some of the services for which you have taken any sort of the payment. Now let's take a look on the example 1. Suppose if a loan is obtained by the entity in past, it creates an obligation on the entity in present, and the future economic benefits like cash or something in exchange shall flow out of the entity in future. Example 2. Liabilities does not always involve the money. It can involve the provision of the services as we discussed before. In example 2, you will get the clear idea what I am talking about. If money is received in present and it causes the liability, it causes the obligation on the entity that the entity has to provide the services against the payment so received. Therefore, it is a type of liability as well. Types of liabilities. There are 2 types of liabilities. Number 1, current liabilities, and number 2, non-current liabilities. Current liabilities means the liabilities which are to be paid within 1 year. For example, accounts payable, notes payable, salaries payable, rent payable, unearned income. This has to be known very well that income received but the services against it has not been provided yet. While telling you the example of liability, I told you that it is a type of liability as well, because the services for which the payment has been received, it is an obligation on the entity to provide those services. Therefore, it is supposed to be a liability. Then, accrued expenses, expenses payable, and the short-term loan, the payment of which is to be made within 1 year. Then, non-current liabilities, the payment period of which exceeds 1 year. Now, it is decided among the parties that what should be the payment period. For example, long-term loan payable, and then number second, debenture or bond payable. We shall discuss debenture or bonds payable in the next video while discussing about the company's accounts. But for the time being, you have to know that debenture or bonds payable means the loan extended by the debenture or bond holder to the company. Now coming to the fourth element, revenue. Although there is a long chapter on discussing about revenue, and we shall discuss it in the next videos, but for the time being, you got to know that revenue is any source of income, means income earned by any mean. For example, this is the main source of any company, that by selling its product and by selling its merchandise, as we have discussed before, that the merchandise is the main business of the company. Therefore, the sales is most common medium to earn the income by the entity. Then, commission income, rent income, consultancy fee income, all these are types of income by which one can earn its income. Now let us take a look on the final element, owner's equity. Owner's equity means any investment made by the owner in the company. This investment can be in the form of cash, merchandise, or any other fixed asset. Now the question is it only the investment made by the owner? And the answer is no. It can be any contribution made by the owner and the company. It can be investment, and together it can be the liability of the company paid by the owner himself. This shall be considered as his investment as well. And keep in the view that the investment made by the owner or the contribution made by the owner shall be recorded by one title of account, and that is capital.